Hi, this is Charlie giving you Wednesday's video for this week. I hope you're very well. So I thought I'd do an update on the trading challenge account. So I said when I did the webinar back in, I think it was early July, that I was going to be doing this challenge on a £20,000 account. To see if we can go back in black as a result of failing on the 50k challenge, as I went through all of that a couple of months ago. So where are we right now? I thought I'd do an update for you. So the challenge account is now up at about 32,000. I've just lost that. That's just disappeared. That wasn't very. Let's see if it comes back. There it is. About nearly 33,000. So it's about 65% on that, so just under 65%. So that's where I've got up to at the moment on the challenge. And what I'll continue to do is I'll do another update as we get to the end of the year. So let's have a look at a chart here. So this is where it's got to, went a bit underwater, and then we've broken up, and then really not too much going in August, just pretty much, as you can see, trading sideways there through August. So I thought I'd just do an update for you there. And realistically, what is my goal with the trading challenge? Well, I think it's a step-by-step process. So the next logical level would be 40,000, to be working it towards 40. Then when I get to 40, then I'll be looking at 50,000, and so on and so forth. So that's the logical sort of process that I'm looking at. And then it's just a case of building from there. And we've just gone through August, a bit of a sideways month, as you can see. Look at gold here, and look at some of these other markets have been a bit sideways through August, although they've been moving around a bit day by day, but no real trends. So as we go into the latter part of this year, the final quarter, we've got geopolitical risk in the markets. We've got US presidential elections. We've got Brexit. All sorts, trade wars still obviously simmering around away as well. So I do believe that there's going to be ample opportunity going on some of these in some of these markets over the latter part of the year. So I'm just going to give you some of my thoughts on some of these markets. In fact, I know you get a daily report from Kim, but most of his stuff is very, very short term about what he's doing for the day or looking at and support and resistance levels. And so I thought I'd just give you some of my bigger picture views here today. So we'll start off with gold, as I've got gold up here. In fact, I was long gold with our swing traders right from here, right at the end of March, and we ran most of it, or the second half, right away up to about 2020, and the first half, I can't even remember where we exited the first half, but it was up here somewhere. So we had a good run on gold, and then gold obviously fell off, as we know, in early August. The problem I had with gold was it was just getting too frothy. It was starting to concern me when you know that the masses are getting involved in gold and silver and commodities. And when I say the masses, I'm not even talking about the trading. I'm not talking about the trading community. I'm talking about the non-trading community. And when they're all interested in the markets, that's when it concerns me, because they don't have any business being in the markets. And it just says that word of mouth is going around, so that the average Joe, no disrespect to the average Joe, but they're now looking at buying silver, buying gold. And so what the market needs to do is to shake them off. And the term is weak hands. So the average Joe tends to have weak hands. And what I mean by that is, if the market goes sideways for a couple of months, they're likely to bail out and get bored and say, oh, that's rubbish, that gold, I'll go back to sports betting or whatever it might be. And so that's what the market needs to do, to shrug off the weak hands. And it'll do that via two ways. It'll either go sideways for a couple of months or more, or it'll do more of a pullback, and that will shake them out as well. So that's what I'd like to continue to see in gold, as much as I'm still very much a bull on gold. But I would like to see a more of a shakeout. And that shakeout, you don't always get what you want, but this is what I'd like to see, is either going to be more chop, more general directionless sideways range, or more of a pullback. Because that'll do, either one of those scenarios should be enough to shake out some of those weak hands that I've talked about. Okay, so that's what I'm looking for there. But if we do get more of a pullback, then I'm going to be looking to buy again on gold at some point. So that's my personal objective there. As far as the S&P, the stock markets are concerned, I think it's important just to have a look at that. And I want to just show you the daily chart, but I really want to show you the monthly chart here. We've been on this very low volatility rally, and then all of a sudden, late last week, the markets decided to perk up and get some volatility going. And so, of course, a lot of people think, oh, this is it. The market's now going to sell off, and maybe it does. But personally, at the moment, from a technical perspective, there's a couple of things I'd just like to draw your attention to. One is this beautiful trend channel that I've got on my chart, and the lower trend channel line, this is on the S&P futures, by the way, started right off the lows in 2009. And then all I've done is I've just copied a trend line across, and the beauty is that that trend line, the upper trend channel, comes right in line with the lows from 2003. So I really like that. So you might want to put that on your futures charts there. So what I would like personally, and I may not get it, but what I'd like is the stock markets to still go higher yet, because if they got up to the upper trend channel line, then I would be looking for signs of weakness to come in, okay, for what would, potential short selling once we get to the upper trend channel line there. So I don't know if we're going to get it, but I'm just letting you know that that's what I would like to happen. If I look, and the other thing that I said there was two, is the fact that the Dow still yet to make new highs and confirm the other markets, the Nasdaq, the S&P. So I would quite like the markets to actually still go higher. At least in the nearish term, over the next month, 6 weeks or so. Very aware of the presidential elections coming up. So I would like to see if they could go higher. They may not be able to do it. It may not happen now because we're only less than 2 months away from the presidential elections. We shall have to see. All I'm saying is if we did manage to come up again over the next 4 to 6 weeks, then if we got up to that upper trend channel line, that's where I would be interested myself. Now, what happens if it doesn't though, and the S&P just sells off from here? Yep, many of you I'm sure are probably quite bearish on it because traders tend to be, and so that could work out for you. That's all I can say, because definitely the stock markets are a bit out of sync with, you could say, with the domestic economies, but the stock markets, they do what they want to do, and so I'm not a massive bear, but of course the presidential election could bring about more volatility as we close in on that, but yeah, certainly as far as I'm concerned, if we can go higher, I'd love to see it go higher. Then that's where I'd get interested on the short side. At the moment, I'm not particularly bothered, but if you are, then great, you might be able to make some money out of that if it does come down. I think that'll be enough for now. Just a couple of markets there, and my general views there. Gold, I'm very much interested. Bitcoin, in fact, if I look at Bitcoin, I think Bitcoin's been really interesting. The way that it's pulled back here as well recently, and I think this is another shakeout for that community. So, but longer term, I'm very much a bull on the Bitcoin market. So again, I'm not necessarily going to be 100% right, but when Paul Tudor Jones, one of the most successful fund managers in the world, has bought Bitcoin, it does make you sit up, or you should sit up and take note, because a chap like that doesn't go and put 2% of his entire portfolio into Bitcoin for no reason. So anyway, food for thought there. I shall leave that with you. I'm going to be doing lots of shorter term trading, of course, as well, but I just wanted to give you some of my longer term views there. Take care for now, and I'm off on a holiday actually, so I will record a video hopefully for while I'm away. Obviously Kim will be doing the daily videos anyway, so I'll be back in a couple of weeks.